Biking without a helmet? Risky. Climbing Mount Everest? Risky. Bear fighting? Risky. Borrowing money without any collateral? Risky. Leaving the stove on and going out to get groceries? Risky. Trading futures without a solid risk approach might be the riskiest of all. Hey, this is Joey with NinjaTrader. Today we're walking through the risk settings built into NinjaTrader Prop, which include daily and weekly loss limits, profit targets, and trailing max drawdown controls. Plus, we'll cover how setting them up before your session even starts can help you trade inside prop firm rules without relying on willpower alone. So, let's start at the beginning. What even is a risk setting anyway? Well, they're account level parameters that define how much you can lose, how much you're allowed to make, and where your drawdown threshold sits, all before you ever place a trade. Rather than reacting to losses after the fact, risk settings act as guardrails that enforce your predefined rules in real time. It's like wearing a seatbelt. It costs you 3 seconds to put on, but it's worth its weight in gold if things go south. Now, something to keep in mind. Not all prop firms use the same evaluation structure. Some track losses on a daily basis, others use trailing drawdown that adjust as your equity grows. NinjaTrader's prop risk settings are designed to work alongside NinjaTrader prop firm rule sets, so you can align your controls with your firm's specific evaluation criteria, whether that means a hard stop at a daily dollar threshold or a dynamic drawdown ceiling. Discipline is essential in prop trading, but willpower has limits, especially during drawdown streaks or high volatility sessions. Hard-coded risk settings remove the in-the-moment decision of whether to keep trading. The limit simply triggers and the session ends. Risk settings enforce the limits you've already decided on before emotion can override them. It's like having a good friend sitting next to you while you're trading saying, maybe not, when you've gone too far. So let's get into the controls, starting with loss limits, which are the most fundamental prop firm risk controls. They define the maximum amount your account can lose in a single day or across a full week. And when that threshold is hit, trading stops automatically. A daily loss limit is a hard stop. It's the maximum dollar amount you're allowed to lose in a single session. Once you hit it, the platform locks you out for the remainder of the day. So for instance, if you have a daily loss limit of $200 and you're out $200 for the day, then that's it, you're done. It works like this. You set the limit before the trading day begins, the cap applies to both realized and unrealized losses, and once triggered, no new orders can be placed until the next session. This prevents a single bad morning from wiping out a week of gains, or worse, ending your evaluation entirely. Weekly loss limits function the same way as daily caps, but across the full trading week. They're especially useful for traders who might recover from a rough Monday, only to give it all back by Thursday. They reset at the start of each new trading week, and they work independently from, or in combination with, daily loss limits. Setting both creates a layered safety net for your evaluation account. Before we move on, if you're serious about being a prop trader, you're going to want to learn as much as you can, so be sure to hit like and subscribe so you can stay up to date with all our prop content. Now, the other side of the equation, profit targets. And yes, profit targets are a risk management tool. Knowing when to stop trading after a winning day can be just as important as knowing when to stop after a losing one. NinjaTrader Prop lets you set profit target thresholds that automatically lock the account once a session goal is reached. Once hit, a daily profit target closes out your ability to place new trades for the rest of the session. Overtrading after a strong run is one of the most common ways funded traders give back gains or take on unnecessary risk. A daily profit target allows you to lock in a strong day before the market can take it back, eliminate the temptation to let winners run past your plan, and protect evaluation progress during periods of high volatility. NinjaTrader Prop supports both daily and weekly profit target settings, giving traders flexibility to structure their goals however their plan requires. A daily profit target stops trading once a single session dollar goal is reached. A weekly profit target stops trading for the week once a cumulative goal is met. And both can be configured independently or used together for full session control. Now, let's talk about trailing max drawdown. These are some of the most misunderstood yet consequential risk parameters in prop trading, so lock in. This is important stuff. NinjaTrader supports both real-time trailing max drawdown and end-of-day trailing max drawdown. So let's go over each of them. First up, what's a real-time trailing max drawdown? This type of drawdown adjusts the trader's maximum allowable loss threshold upward as account equity increases, but it never moves it back down. The drawdown floor rises with every new equity high, including unrealized gains. If your account peaks intraday, the floor moves up immediately, which creates tighter risk parameters during winning sessions. So for instance, if your account peaks at 55,000 intraday and your trailing max drawdown is 2,000, your floor moves to 53,000, even if you haven't closed the trade yet. EOD, aka end of day trailing drawdown, works differently. It only adjusts the drawdown floor based on your account's closing balance at the end of each trading session, not intraday peaks. Unrealized gains don't raise the floor during the session, and the floor adjusts overnight, based on where equity closed. This gives traders more intraday breathing room than real-time trailing. So, an example for this one would be, if your account opens at 50,000 with a 2,000 trailing drawdown, your floor sits at 48,000. During the session, your account climbs to $55,000 intraday, but because this is EOD trailing, your floor doesn't move. It stays at $48,000 for the entire session, regardless of those unrealized gains. So if your realized equity at the end of the day is 52,000, the floor adjusts overnight to 50,000 based on that closing balance. Understanding which trailing method your prop firm uses and configuring NinjaTrader prop to match can help you stay inside firm-specific evaluation criteria. And choosing between real-time and EOD trailing drawdown isn't a minor technical detail. It's one of the most important risk decisions you'll make before your first trade. So, let's put it all together. Most evaluation failures aren't caused by bad strategy. They're caused by one or two sessions where a trader pushed past their limits and traded when they should have stopped, which could happen in lots of different ways. Exceeding the daily loss limit by revenge trading after a drawdown, hitting the trailing max drawdown floor during a volatile session, overtrading a winning day and giving back enough to breach a threshold, or misunderstanding EOD versus real-time drawdown and not accounting for open positions. Each of those has a direct fix inside NinjaTrader's props risk settings panels. You can review your firm's daily loss limit and match it in your account settings. Check whether your firm uses EOD or real-time trailing drawdown. Then configure accordingly. Set a daily profit target that protects strong sessions from unnecessary risk, and consider enabling the manual lockout feature for an additional layer of voluntary control. When your platform's settings mirror your firm's evaluation rules precisely, violations become easier to avoid. The traders who maintain funded accounts over time aren't necessarily the ones with the best entries. They're the ones who use risk management to protect their capital consistently, session after session.